Some important news on housing in the UK, with the news that house prices for the UK as a whole have suffered their first annual fall since 2012. Now here's the data. This chart shows the annual rate of house price inflation, and you can see there was some disinflation in recent times. House prices still going up, albeit at a weakening pace. It's only when we fall below the dotted line that we end up with house price deflation, such as we saw obviously amplified in the global financial crisis and its aftermath. So this chart shows the average price for the UK since 2005, and you can see that the average price in the UK is now £291,000. Within that, England 310,000, Scotland 195, and of course even within that, if we disaggregate, huge differences at local and sub-regional level. Real property prices adjust for the effects of inflation. So you can see in Spain, property prices have fell sharply during the global financial crisis and have really not climbed much at all. Whereas in Ireland, real property prices have climbed very sharply in the last 10 years, but now falling back. Germany, likewise, again, quite a big fall in real prices. And let me put the UK on there. You can see that in real terms, property prices have been falling now for the best part of a year or two. But they're still above where they were in 2009. Of course, the big story, one big factor behind the fall in house prices has to be the increase in cost of mortgages. Here's the data, recent data on mortgage interest rates from 2-year fixed rates to 10-year fixed rates in red there. If you can get a 10-year fixed rate, not that you can always get one. And there's been clearly a major increase in mortgage interest rates, the consequences of which will filter through to house prices into 2024 on the demand side. What about the consequences of falling house prices? Here's a little exercise if you want to press the pause button. How can you think of 3 consequences for the economy of a period of house prices going down? So if we have, for example, in 2024, an annual decrease in house prices, what might that do for the UK economy? Have a think about that. One effect can be on household wealth and consumer confidence. A lot of people regard their property, their home, as a big part of their wealth, major part of their financial wealth. So if they're in an area where property prices are going down, they may well feel less affluent. There's a negative wealth effect, and that could feed through to a fall in consumer spending, which in turn, of course, will lead to slower growth of aggregate demand or GDP, because consumer spending is the biggest part of total demand for goods and services. Second effect can be on the output, investment and employment in the construction sector and related industries. So a slowdown in the housing market, reflected by falling prices and transactions, could result in falling demand for new construction, new real estate services. And then you have a cascade effect, or we might call it a negative multiplier effect, on industries where sales and output and jobs and profits are derived from the housing market, the construction materials sector, the home improvement industries, estate agents and so on and so forth. So housing, I think whatever it's worth, about 7%, construction is worth 7% of GDP, but other industries are obviously affected. And the government is impacted too. Fall in property values may lead to a fall in stamp duty revenues. Stamp duty, of course, percentage of the purchase price of a house. And a slowdown in the housing market could lead to direct taxes being hit by a possible fall in employment in construction, and housing-related businesses making less profits. They pay less in corporation tax. And those are just 3 possible consequences of falling prices. So what we're seeing is that house prices have now stopped rising. We've seen the first fall on an annualised basis. Are we about to be tipping in or tilting into a deflationary period? Well, prices seem to have stabilised. They're obviously falling in some areas more than the average shows. It's likely that property price deflation will be mild, although higher mortgage rates have clearly had a big impact. Average mortgage payments, £250 per month higher than 2 years ago. And many, many people in 2024 have to renegotiate a fixed rate mortgage, and they'll suffer a big hit to their disposable incomes. The cost of borrowing has gone up. That's made home buying less affordable. Hopefully, the fall in price may help to improve affordability over time, but of course, depends on the cost of the mortgage too. The current fall in prices might also be impacted by the buy-to-let market. A lot of landlords, I know some personally, have been trying to sell some of their properties because they've got a very high exposure to mortgage debt, and so they're trying to offload some property to obviously cash out essentially on their investments and reduce their debt exposure. And whilst this video has been about falling house prices, residential prices, keep in mind, of course, that the cost of renting, particularly from the private sector, is rising fast, something like 6, 7, 8% per year. There is a national shortage of high quality rented property. There we go. Thanks for joining in. Lots happening on the housing market. Keep in touch with our videos as they come out. For now, take care and see you soon.